Preparing for 2025. Building your digital credit profile. Let's talk about preparing for the credit revolution of 2025. You might be wondering, how can I start boosting my AI credit score today? Well, the good news is that you don't have to wait until 2025 to get ahead of the game. There are steps you can take right now to build a strong digital credit profile. Think about it, the way we build credit is changing. Gone are the days when simply paying your credit card bill on time was enough. In this new world of AI-powered credit scoring, every aspect of your financial life matters. From your social media presence to your online shopping habits, it's all part of the picture. Here's the thing. Maintaining a positive online presence is becoming just as important as maintaining a good credit score. AI systems are looking at your digital footprint to get a sense of who you are and how you handle your finances. So, how you present yourself online could impact your creditworthiness. But don't worry, this doesn't mean you need to become an influencer or share every detail of your life online. It's more about being mindful of what you do share. For example, if you're a freelancer, sharing updates about your work or professional achievements could signal financial stability to AI systems. Now, let's talk about leveraging alternative data sources to your advantage. Remember, AI is looking at more than just your bank statements. It's considering things like your utility payments, rent history, and even your subscription services. So, setting up automatic payments for your bills isn't just convenient. It's a smart money move that could boost your AI credit score. Here are some small actions that can have a big impact on AI credit assessments. 1. Use a budgeting app to track your spending. This shows you're actively managing your finances. 2. If you're a gig worker or freelancer, keep detailed records of your income and expenses. AI systems are getting better at recognizing these non-traditional income patterns. 3. Consider using buy now, pay later services responsibly for planned purchases. This can demonstrate good financial planning. 4. Maintain a steady balance in your checking account. Wild fluctuations might raise red flags in AI assessments. Now, I know what you're thinking. What about my privacy? Do I really want all this information out there? It's a valid concern, and it's all about finding the right balance. You don't have to share everything, but being strategic about what you do share can work in your favor. For example, you might choose to allow your rent payments to be reported to credit bureaus. Or you could opt into programs that consider your utility payment history when assessing your creditworthiness. These are ways to build your digital credit profile without oversharing. Speaking of rights, it's crucial to understand yours in this new credit landscape. As AI takes on a bigger role in credit scoring, there's a push for more transparency. You have the right to know what factors are influencing your credit score and to dispute any inaccuracies. Stay informed about changes in credit reporting rules and don't be afraid to ask questions if something doesn't seem right. Here's the exciting part. By proactively managing your digital footprint, you can actually boost your creditworthiness. It's not just about avoiding negative marks anymore. It's about actively creating a positive financial image. Every time you pay a bill on time, make a responsible purchase, or demonstrate good money management, you're adding to your digital credit profile. Think of it like tending a garden. Each positive financial action is like planting a seed. Over time, these seeds grow into a lush, healthy financial profile that AI systems will recognize and reward. And the best part? You don't have to wait years to see the results. With real-time credit monitoring, you can see the impact of your actions much more quickly.
Let's talk about a growing concern in our increasingly digital world. Maintaining good credit without sharing your entire life with AI systems. It's a valid worry, and you're not alone if you're feeling uneasy about the idea of algorithms analyzing your every move. The truth is, while AI-driven credit scoring offers some exciting possibilities, it's not for everyone. Some folks are rightfully concerned about privacy and the potential for bias in these systems. So what if you want to opt out? Is it even possible to keep a good credit score while keeping your data to yourself? The good news is that in 2025, you'll still have options. Some lenders are expected to continue offering traditional credit assessment methods alongside the new AI-powered systems. This means you might be able to apply for loans or credit cards based on your FICO score and standard credit report, just like in the old days. But here's the thing, choosing the traditional path might come with some drawbacks. As more lenders adopt AI scoring, those who stick to old-school methods might find themselves with fewer options. You could miss out on some of the benefits that come with AI scoring, like faster approval times or more personalized interest rates. So how can you build and maintain good credit in 2025 without letting AI peek into every corner of your life? Well, many of the tried and true methods will still work. Paying your bills on time, keeping your credit utilization low, and maintaining a mix of credit types will continue to be solid strategies. For example, you might focus on building a strong relationship with a local credit union or community bank. These institutions often take a more personal approach to lending, considering factors beyond just your credit score. They might look at your employment history, your savings habits, or even get to know you as an individual. Another option could be to use secured credit cards or become an authorized user on someone else's credit card. These methods can help you build credit without necessarily exposing all your data to AI systems. But let's be real, opting out of AI-driven credit scoring in 2025 might mean you'll have to work a bit harder to prove your creditworthiness. You might need to provide more documentation when applying for loans or credit cards,